It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian investors sitting on their hands after the first US megacap tech earnings failed to impress. Tesla posting its fourth straight profit miss. Alphabet facing pressure to keep up on AI. Also ahead, Kamala Harris hits the campaign trail with a direct attack on Donald Trump, telling Americans they face a stark choice in November. Plus, India's budget raises taxes on stock and derivatives gains for the first time in decades, seeking to curb a surge in speculative trading. All right, let's get straight to our top story with Magnificent Seven earnings starting on a sour note. Tesla posting a fourth straight quarter of disappointing profits, as well as delaying the much-anticipated launch of its robotaxi unit until October. CEO Elon Musk talked about that on the investor call.
I wanted to make some important changes that I think would improve the vehicle, the sort of the robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things.
All right, for more, Bloomberg transport reporter Danny Lee joins us. Danny, it's not really an unfamiliar position for Tesla investors, is it, to be asked for patience from Elon Musk? What sort of delays are we anticipating, not just on robotaxi, but on some of the other products that have been promised but not yet delivered?
Yeah, and that includes the low-cost EV that Tesla is developing. Initially, we heard early 2025, but it will now come into production and on sale by the first half of next year. So it does give a bit more of a clearer time frame, but it's longer than what analysts and investors have been expecting. And again, it feeds back into the criticism of the core car business, which has a stale and small lineup compared to someone like BYD, which is China's best-selling car maker, which has over 100 models and variants on sale at a wider range of price points. So for Tesla, with the earnings picture, we did see that the second quarter sales were still a slip on the year-on-year picture, which is why we saw profitability kind of fall for the fourth straight quarter, and then also earnings not looking good. But it was a mixed picture overall, given what revenue a little bit up and what analysts in the street had been expecting.
Yeah, the EU, of course, also has tariffs on China-built cars, and Tesla has a factory in Shanghai. What's Elon Musk had to say about this?
Yeah, Elon Musk clearly has concerns about tariffs, particularly on the EU, because the outlook really is, what kind of tariffs Brussels will place upon Tesla. Tesla has been singled out rather for a particular kind of tariff, which we will know in the coming months. Clearly, what it makes out of Shanghai is really integral to its business, and it exports these very efficient produced cars out of Tesla China across the world. And so there is some concern there for Elon Musk about what kind of impact tariffs would have in the longer run.
Well, Tesla's obviously got a lot on its plate right now, so why not add one more thing? And in truly Elon Musk style, he's put a question to some of his Twitter followers about investing $5 billion into XAI. What's this about?
Yeah, Tesla, the money coming from Tesla, Elon Musk is asking whether Tesla should invest $5 billion into XAI, which is Elon Musk's AI business. And so it helps kind of AI, and it helps the AI narrative that Elon Musk is trying to frame around Tesla, frankly, with this idea that Tesla is more than just an EV company. It's something much bigger than that within the context of the Mag 7 stocks, where you've got the likes of NVIDIA there. So it's reframing that debate, and particularly around how Tesla has a whole load of other products coming down the pipeline, such as robotaxis, such as humanoid robots, that this could help redefine Tesla in the long run.
So what are analysts saying about the outlook for Tesla and a potential return to profitability?
I mean, that return to stronger profitability will take time. And clearly for analysts for Wall Street, you just have to look at the reaction after market. Shares were down almost post-market 9%. And so patience is being the watchword here. Elon Musk wants analysts and investors to be more patient over the next several quarters as these kind of new products, the expanded lineup for Tesla starts to make its play over next year in particular. So this is clearly a waiting game and a patience game for investors and analysts.
It's, of course, a return to stronger profitability. Thanks for clarifying there, Asia transport reporter Danny Lee. Well, shares of Google parent Alphabet also fell in extended trading, and that's even after the company reported a second quarter revenue beat, boosted by cloud computing demand and search ads. Bloomberg's Ed Ludlow has more on the results and also his conversation with Alphabet CIO Ruth Porat.
This was the first quarter where cloud revenues exceeded $10 billion, but also for the first time, they kind of had more to show around artificial intelligence, all the investment and work in that field. The way that Ruth Porat described it on the call with me was that, like, look, it's AI infrastructure solutions and generative AI. They're meaningful drivers of growth for the cloud business. And on the analyst call, she kind of expanded and gave an almost granular kind of run rate figure, which was that year to date, the company is generating billions of dollars in the context of cloud from generative AI and AI infrastructure. Search is the main driver of overall growth right now. That's not a surprise. It's still the bread and butter. But there are signs that the work of AI-driven search is starting to boost that. Wiz was the question that everyone wanted to ask. Basically, Ruth Porat declined to comment specifically on Wiz. But when we asked about M&A, she said Google and Alphabet, the parent, are still open-minded to opportunities as long as they kind of meet the requirements of what they're looking for. That also includes working with whoever's in power in the context of a US election later this year. There were some bits that kind of also took me by surprise. You know, Alphabet and Google reaffirming its commitment to Waymo, the robo-taxi service. Waymo's doing 50,000 paid rides a week right now, predominantly in San Francisco and the greater Phoenix metro area. But Alphabet's backing them financially. $5 billion will go into Waymo on an annual basis. It's kind of in line with historic investments, but they said they're really pleased with that line of work. This was also Ruth Porat's last quarter in this kind of combination role of CFO, CIO, and president, and the new CFO coming in July 31st. Now she's going to be much more focused on public policy and much more focused on that cloud growth story, particularly as Google Cloud Platform works with governments as opposed to just corporate customers. This is Ed Ludlow for Bloomberg News in San Francisco.
All right, so with a mixed bag from Alphabet and Tesla under our belts, let's take a closer look at how markets are performing in Asia. Avril Hong's in Singapore. Avril.
Yeah, Paul, we were really watching out for the first of these big tech earnings to drop for Asia markets. It's an important driver, and it was a challenging setup coming into the session today with those underwhelming results from Tesla, from Alphabet, as you mentioned. So we're seeing Asia markets mostly on the back foot today, the bleed being seen as well on the Hang Seng. Overall, Chinese stock markets have been losing momentum as policy disappoints. Even though we got a rate cut from the PBOC earlier in the week, there are also signs that the national team is pulling back support for the stock market. The yen also in focus, continuing its climb this week, hovering at around 155 now, and with an eye on the BOJ next week. Paul.
All right, Avril, stick around because we're going to talk markets now with our next guest, Eli Lee, a Chief Investment Strategist at Bank of Singapore. And Eli, I want to start off, if we can, with those with the impact of those Magnificent Seven earnings from Tesla and Alphabet on Asia tech today. And that is our question of the day. In fact, how hard are these tech woes going to hit global stocks, in your view?
I think that's going to be a negative knock-on effect for sure, Paul. And I think it's super interesting that, you know, if you dug into Alphabet's earnings, they actually beat expectations. So I think, you know, the bar from investors after the run-up we've seen in global equities year to date, investors are looking for opportunities to take some profit. And I think even though we think tech earnings is going to be fairly resilient over the next few weeks, we may see some volatility in equity markets.
What about sector rotation, though? If it's coming out of tech, does it naturally go into some of these other sectors? Because we also see signs of a flagging US consumer, and perhaps that puts pressure on discretionary as well as small cap stocks as well.
I think so, Avril. I think that's a great point. And I think at the same time, we are seeing a lot of uncertainties related to the US election coming to the forefront. So I think that there could be some rotation into small caps. And I think sectors that investors could believe benefit from Trump potentially winning the election. So that's financials, and clean energy stocks may see a negative impact as well. So all these are trends that I think we should be looking out closely for.
What about for the US currency? Is that a Trump trade? I mean, we're seeing all these mixed signs of whether we see a positive or a negative sign if Trump does indeed come to power.
I think that's a great question. Now, I think unambiguously, if Trump does win the election, that's going to be a positive for the US dollar. But, we are still 100 days away from the election. I think it's too early to call, really, for the outcome. But as prediction markets, price in that likelihood of a Trump win, we're going to see the dollar move in sync.
That's an interesting question, though, because you say a Trump win would be US dollar positive, but at the same time, Donald Trump's been quite clear that he would like to see a weaker US dollar. So who's going to win that battle of wills, Donald Trump or the market?
That's a great question, Paul. Trump would like to have his cake and eat it too. But if you dig into, I think, the key, tenets of his overall policy. So number one, he's going to continue his tax cuts. That's going to be a positive for the U.S. economy. That's a dollar positive. And second, if he does go through with the tariffs that he's threatening, even just a portion of it, historically, leads to a stronger dollar as well. And if the long-dated yields do exhibit some uncertainty with regards to fiscal sustainability concerns, then that's going to drive a higher dollar as well. So I think you're right that it's still uncertain for now, but I think the odds are pointing to a higher dollar if Trump wins.
What about how you'd be positioning in this part of the world for South Korea, Taiwan, these tech-centric gauges? In the lead up to the US election, likely we see more volatility, but we also have maybe that removal of tech leadership from the US side of things as well.
Right. So I think the great thing is we think that the secular momentum of the AI theme is very real. And we are seeing in the first wave into the picks and shovels now, which is the semiconductor complex. But ultimately, the ROI is going to come in terms of use cases across domains and industries. So, to answer your question, we think that there could be some near-term volatility within the tech complex, but longer term, we think the tech sector, especially in Asia, will have a very bright outlook.
Tech, AI, definitely very much the catalyst for markets today, but we've got a couple of big central bank meetings coming up. I want to start with the Fed. You've got a base case for 2 cuts this year, but I guess there's a major question around the timing of that, particularly with that November election on the horizon.
Right. So, there's been a lot of talk about how Powell could have, the elections within his sights, that he doesn't want to be seen to be disrupting it too much. But we think, the top priority is definitely, I think, his 2 mandates, right? Unemployment and inflation. I think the Fed speak that we've been seeing over the last few months tell us that he's very ready, very close to moving. Core PCE coming in later this week will likely show a continued downtrend. So base case, we think the first cut is in September, with a second cut coming in December, Paul.
What does this mean for Asian central banks in the meantime? Because they might not want to move ahead of the Fed, but as growth slows, maybe it makes sense to do so. This week, we're seeing from China, Sri Lanka today. We're looking ahead to the MAS on Friday as well.
I think the global central banks, especially in Asia, are looking forward to a Fed cut as well. Now, China has dire near-term growth problems, but on the other hand, it's trying to prevent too much currency weakness. So if the Fed cuts, that's actually going to untie the PBOC's hands to, I think, more rapidly push in monetary easing and more fiscal easing from the government as well.
That cut from the PBOC earlier in the week, though, what is your sense of what is geared more towards? Because we've heard how economists say it's going to be very unlikely that it actually does help to stimulate demand in the economy. Is this more towards shifting market sentiment, helping to prop that up a bit?
Absolutely. So the fact that it came right after the third plenum tells us a lot. Expectations going to the third plenum wasn't really high, but yet despite that, it was still kind of underwhelming. So I think you're right, Avril, that the signal being sent by the rate cut right after that is probably more important than the actual impact that it's having on the economy.
We've talked about stocks, we've talked about the currency. You've been quite strong on gold. We've seen it hitting all-time highs, even ahead of a Fed rate cut. How much further upside do you see for the commodity when the Fed actually does cut?
So our near-term target for a long time now has been about 2,500. We think over the next 3 to 6 months it could well overshoot. Many reasons, and this has been discussed. The fact that the Fed is cutting rates will help gold. The fact that central bank buying is still very strong. And let's not forget, geopolitical uncertainty globally is still very, very high. And I think all these factors will lead to a pretty constructive outlook for gold.
But safe haven demand is not the key driver, right, for gold?
I think that's one of the factors driving that as well. And tying into that is that regardless of who wins, be it Trump or Harris, U.S. fiscal spending is going to continue to be quite elevated. And that's going to be a positive driver for gold as well.
Is there anything else out there that you like, Eli?
Right. So we think that there could be some near-term bumpiness, especially in U.S. equities. But longer term, we are still constructive on the global equity outlook. And we think Asia ex-Japan looks particularly interesting right now within the equity space, particularly India, Indonesia, and South Korea.
Okay, Eli, we'll see what the rest of the year holds. Thanks very much for weighing in. Eli Lee, Chief Investment Strategist at Bank of Singapore. Paul.
All right, thanks, Averill. Well, Taiwan and the Philippines have closed their financial markets, as well as some schools and offices. It's all due to a typhoon. Parts of Manila left flooded as the storm battered the city. The storm's expected to hit northern Taiwan on Wednesday night. All right, still to come this hour, analysis of India's budget with Axis Bank as the Modi government spends up big on job creation and increases capital gains taxes. This is Bloomberg. Welcome back now to the US presidential race, and Kamala Harris has taken aim at Donald Trump in her first campaign rally since launching her White House bid by referencing her past work as a public prosecutor.
In those roles, I took on perpetrators of all kinds. Predators who abused women, fraudsters who ripped off consumers, cheaters who broke the rules for their own gain. So hear me when I say, I know Donald Trump's type.
All right, let's bring in Bloomberg's Vonnie Quinn. Vonnie, Kamala Harris and the crowd enjoying themselves there. What were the takeaways from her first real campaign speech as the presumptive nominee?
It sounds like we're going to hear that paragraph quite frequently, Paul. We heard it as well yesterday when she spoke to her staffers, and it does get a great response. Don't forget, she's going to hammer home the fact that Donald Trump is a felon and that he has been twice impeached. She's going to lean on her background as a prosecutor and attorney general. And she said today Americans were not going back to the chaos of the Donald Trump years. Now, she makes sure to point out that she's pitching herself as a candidate focused on the future. And to that end, she moves on to policy, talking about building up the middle class being a defining goal of her presidency if she is indeed elected. She also has promised to put a stop to Republicans' extreme abortion bans, and she has promised to focus on healthcare, childcare, more paid family leave, raising the minimum wage, and reversing Trump's first-term tax cuts. She's intent on taxing the wealthy a little bit more. So those are some of her policy planks right now. Tomorrow, at least Wednesday, in the US, she plans to travel to Indiana and Texas for more campaign stops. And don't forget, the President Biden, addresses the nation Wednesday evening at 8 p.m.
Yeah, and more travel in store as well with the Democratic National Convention now just weeks away in Chicago. What's the plan for the nomination? Do we know yet?
Well, actually, it looks like we might even get a nomination process going sooner. Wednesday, the Democratic National Committee Rules Committee is gathering to try and figure out a process for having a virtual roll call well in advance of the beginning of the DNC. So it could happen as early as August 1st. Now, this is partially to get rid of any smell of the fact that perhaps there wasn't a choice here, that Kamala was foisted upon the Democratic Party. I mean, we have seen in the last 48 hours the Democratic Party come together together and unite behind her, and not just, the elders, but also the grassroots, the state delegations and so on, but just to fend off any kind of idea or any whiff that there might not have been a fully democratic process. It looks like we might have a virtual roll call as early as August 1st. And that, of course, would put a little bit more urgency on her picking a vice presidential running mate. 3 people have emerged as favourites, 2 governors that we've already mentioned, one from Pennsylvania who does extraordinarily well in a red state, and one from North Carolina, same story. And then, of course, Senator Mark Kelly of Arizona, a border state. And that's one of the areas that the Trump campaign is really going after Kamala Harris in. They call her Biden's border czar, and says that she was responsible for a lot of what may have gone wrong, according to them, at the border.
Yeah, well, in the meantime, the money's flowing in for Kamala Harris, getting a boost from celebrity endorsements as well. And I promise you, this is the last time I'm ever going to say the word brat. She's trying to court the youth vote. How successful is she going to be?
I hope it doesn't trigger you, Paul, but yes, brat has a good connotation these days because Charlie XCX, the British pop singer, entitled her album Brat, and it has gone viral. Brat is somebody who likes to party, but also makes some bloopers every now and then, maybe says something idiotic, has a little bit of a meltdown. And the Kamala campaign has really embraced this because, of course, why not? It's earned media, right? It's all of this virality that doesn't need to be paid for out of the campaign pockets or out of PAC or Super PAC pockets. And there's some, relevancy to it as well. Not only does it get younger voters out, perhaps more registering, but it enthuses the nation at a time when there's really a shorter window here for an election. We're talking about 3.5 months here. So it does keep some of the issues that Kamala likes to talk about, from climate change to raising the minimum wage to caring for families and childcare and so on, in the discussion, as well as, making her seem a little fun, a little younger than 78-year-old Donald Trump.
All right, Bloomberg's Vonnie Quinn there in Washington. We have plenty more to come. This is Bloomberg. All right, just want to bring you some news of this market mover in Hong Kong. ASMPT Limited off more than 18% right now. This company is involved in chip assembly and chip packaging as well. They're off more than 18% at the moment. This is after posting net income for the second quarter and guidance for the third quarter, both of those missing the average analyst estimate. The third quarter forecast, ASMPT sees a revenue of 370 to 430 million. The estimate was for more than 500 million, so quite a substantial miss there. Second quarter results missing as well, and you see the stock suffering there in Hong Kong at the moment, off by more than 18%. Also watching related to tech, stocks related to Google. Of course, we had shares or earnings announcement out of Alphabet at the moment. EPS growth coming in a little bit better than expected there, but it was a very, very narrow beat. So kind of a mixed bag there for Alphabet. But we're seeing some of those tech-related stocks in Asia performing pretty well. SK Hynix particularly better by 2.6% at the moment. Samsung Electronics, after a sluggish start, now higher by 0.25%. All right, we'll take a closer look at markets in a moment. We'll be bringing you up to date on the India budget as well. This is Bloomberg. All right, we've got live pictures here of Yilan in Taiwan. You can see the weather there isn't great. So that is a typhoon currently hitting Taiwan. We do have markets there closed due to this. Markets were also closed in the Philippines. There was flooding in the capital, Manila, earlier. Taipei, though, is going to announce at 8 p.m. today whether work is going to resume on Thursday. Perhaps the typhoon will blow over and those conditions will clear up. But for the meantime, markets closed in Taiwan. Classes also suspended, schools out. That typhoon bringing heavy rain, strong winds of up to 150 miles. That's 240 kilometres per hour. Well, we've got China markets just heading to lunch at the moment, and we're having another down day for the CSI 300. Not quite as bad as yesterday, though, off about 0.1%. The market in Hong Kong also weaker by about 0.5%. We have seen the market suffering there. It appears that the national team not giving the support to stocks that we might normally anticipate. We've got the upcoming Politburo this month, meeting this month, also very much on the radar in terms of a possible trigger for state support, but we haven't seen much evidence of that so far. All right, let's take a closer look at markets now in Japan. Avril's with us. Avril, what are you watching?
Today. I think this is in line with much of the region after those Mag 7 earnings, the first of them, disappointed, underwhelmed investors, call it what you want. So stocks there are still coming under pressure, actually deepening further those losses as we come back from the lunch break. The other driver we've been watching in markets has been the eye on the BOJ day next week. The survey of some of the economists from Bloomberg show that about a third of respondents, about 50 economists that were polled, see a rate hike still next week, while about 90% expect a risk of one along with bond purchase reduction. It looks like in the bond markets as well as in currencies, traders are pricing that in. They are bracing for that. The yen is not just climbing against the greenback, it's also climbing against the Kiwi dollar and all its G10 peers. And we're hearing from some of these Asian traders that the carry trade is being unwound. Let's flip the board because, as I say, it was that disappointment from tech earnings, and we're seeing the Tesla profits disappointing yet again. And these are some of its suppliers that are coming under pressure in the region today, Paul.
All right, thanks very much, Avril. For more now, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garth, I want to start on the tech-inspired sluggishness that we're seeing in the Asia-Pacific today. 5 out of the 7 Magnificent 7 yet to report. Is this going to continue to weigh on sentiment here?
Well, if the rest of the Magnificent 7 have the sort of outcomes we have from those first 2, then yes. But that's a big question, and it does, what's happened with Tesla and with Alphabet does highlight, that there's plenty of anxiety out there that the tech-inspired equities surge this year has gone perhaps too far, too fast. You could argue that, in fact, a little bit of a cooling off would, in many ways, would reassure people. If it just cools off a bit, we start to see things are a little bit less perhaps focused on tech and perhaps less looking like they're frothy, then that might be welcomed by some investors who've been getting a bit concerned that the longer that the market kept on making fresh records, the more likely it was that we're actually entering bubble territory.
Yeah, I mean, it could only go on at that rate for so long, I guess. I want to take a look at China, though, as well. We're seeing stocks continue to slump. The national team missing in action, fiscal stimulus missing in action. How much more weakness are policymakers going to be willing to tolerate?
Well, I mean, policymakers, for one thing, it's not at all clear that policymakers are especially concerned about weakness in the stock market. And even if they are, how much they can do to turn it around. What they really need to do is create a sustained turnaround in the economy. If they could do that just by as easily as they can goose the stock market every now and then by asking the national team to buy a few shares, then they would have done it by now. But it's not so straightforward, which is perhaps part of the reason why they didn't come out with anything splashy from the plenum. The PBOC moved to support things by a small rate cut, and that's been about it so far on the stimulus side of things. And the major problems in China center very much on the real estate sector. That's not the sort of thing that's amenable to a quick fix. That's going to go on weighing on Chinese sentiment for plenty of times to come. I do also think when it comes specifically to the Chinese stock market, there has to be plenty of concern about what goes on with the US elections. Whatever you might think about what happened over the weekend with Joe Biden stepping down from the race, the election is seen as being Trump's to lose. If you're an investor looking at whether you want to go into Chinese equities, well, that's another headwind in and of itself, because he's likely to take a pretty forceful stance against China on the trade front. You'd be reluctant to go in hard in China equities until you can get a better take on how that's going to play out.
I want to talk a little bit. Okay, we're going to have to leave it there, unfortunately, Garfield. But Garfield Reynolds leads our Markets Live Asia coverage. Thanks so much for joining us. Well, Guggenheim Partners CIO Anne Walsh says investors are facing an unprecedented time of what she calls grey swan events. She told Bloomberg exclusively that these historic happenings are coinciding with a series of unusual economic milestones.
If we just take one step back for a second and just think about the gravity of where we are in history, we are awash in what I would refer to as gray swans. We had former President Trump shot at in an assassination attempt. We've had the current leading contender for the Democrat Party, current President Biden, step back. This is an unprecedented time. And in an otherwise larger backdrop, if you will, of all sorts of other unprecedented economic milestones that we've seen, a huge amount of fiscal spending in a very low unemployment world, tightening by the Fed. All of this is going on, and now we have, of course, the volatility made worse by the question of policies. So to your question with regard to where we are in the risk of inflation, quite clearly the bond market thinks so, that there's a risk of inflation and these policies being inflationary, because we've seen a bear steepener. And so as a result, I think the market is perceiving additional risks. I'm not entirely sure that I'm convinced that it's because of inflation fears. I think it's just because of the sheer amount of volume that we have to see get placed into the markets in the Treasury space. And what we're seeing is a bit of a sell-off in advance of expectations of more Treasury issuance. We'll keep on with the spigots are still on in Washington. We're still seeing fiscal spending, and that's still going to continue.
Kathy Jones of Charles Schwab made a great point on our weekend special, because to your point, there's been a lot of history happening. But on that weekend special, she said when it comes to politics, short term, it doesn't matter, but long term, it does. When you think about some of the potential policies that are being floated right now. And to that point, I'm wondering how you're thinking about it as an investor. We talk about the steepener, the flattener, some of these one-off moves that we're seeing. But long term, how are you thinking about actually putting this into a portfolio?
Well, so in what I call the intermediate term, I think that probably the more important information is still coming from inflation coming down and our expectation that it will continue to decline. And I think we're going to see the core PCE in line with expectations, maybe coming in better, and by the end of this year, substantially better, relatively speaking, and a little better than our peers are expecting. And then at the same time, we see GDP slowing, we see unemployment rising a bit. So in the intermediate term, I think that Fed policy is really going to drive the markets, at least in the fixed income space, and obviously earnings and the potential slowdown in the S&P 500 and the equity markets. Moving forward beyond that, I think the number one thing I'm looking at is tax policy.
Guggenheim Partners CIO Anne Walsh there speaking to us earlier. All right, still to come. Axis Bank's chief economist joins us to discuss India's budget and why it should deliver a continued focus on macroeconomic stability. That's up next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India focus, and here's a look at Indian markets just ahead of the open. It looks like we're having a little bit of softness there in the pre-market, and it's been a modestly risk-off day around most markets in the Asia Pacific. Closely watching India, though, because it's unveiled a budget that includes massive spending on employment and projects favoured by key political allies. Bloomberg South Asia economy editor Ruchi Bhatia joins us now. So, Ruchi, what were the key takeaways from this first budget following Prime Minister Modi's election setback?
Well, Paul, it does look like Prime Minister Narendra Modi did listen to the mandate that people gave him last month when he lost the majority in the elections. And the two big areas or key areas of concern that people had was the high cost of living in the country and also the lack of, good quality jobs for the vast young force. And primarily that's the reason that Prime Minister Modi in his budget has focused on these two areas. He's given more money in the hands of people through deductions in the taxation, and on the other hand he has also given as much as 2 trillion rupees to create jobs for the vast young force that's entering for the vast youth population that's entering the workforce. He's also given more money in the hands of the two key coalition partners for the states they run, which essentially means that he's now giving into the demands of the coalition partners to be able to govern for the next few years. Remember, this election also comes ahead of state polls in key states like Maharashtra and Haryana. So the focus clearly is on dealing with the allies and making sure that the voters are happy at the end of the day. Having said that, while this was a political budget, it was also prudent because despite these spending pressures, Modi has been able to curb the fiscal deficit for FY25 to 4.9% as against 5.1% that was projected earlier.
So in terms of clear winners, clear losers in this budget, can we delineate those?
In terms of clear winners, yes, youth, because the government is focusing on jobs now. Also, the fact that states will be getting, the two key coalition partners will be getting a lot of funds and funds for infrastructure development. So these two are the clear winners. Apart from that, the government has focused on infrastructure, where they have retained their infrastructure spending for FY25 to 11 trillion. To a little over 11 trillion rupees. That seems to be a clear winner. Also, areas such as rural development, more, and also the fact that more money will be given in the hands of the middle class through the tax deductions. They are the clear winners. On the losing side, we have the equity market players. They will be taxed a lot more. The government has also imposed more taxation on short-term securities, transaction tax as well, and that's perhaps the reason that we did see the markets coming under a bit of pressure yesterday.
All right, Bloomberg South Asia economy editor Ruchi Bhatia there. Well, our next guest says India's reduced fiscal deficit target indicates a continued focus on macroeconomic stability. Let's bring in Neelkanth Mishra, Chief Economist of Axis Bank. He's also a part-time member of the Indian Prime Minister's Economic Advisory Council. Neelkanth, thanks so much for joining us today. And we do have that budget deficit narrowing down to 4.9% of GDP. Do you see this trend continuing even as spending ramps up? Because they can't rely on ongoing dividends from the RBI.
That's the most remarkable thing about the budget, because it stuck to the fiscal consolidation path. The finance minister guided to FY26, which is the next fiscal year, deficit coming down below 4.5%. And given that the extent of consolidation, of further consolidation that is needed, is now much lower than it was earlier, that target looks very credible. What is also remarkable is how the government is spending much more prudently and therefore making every rupee count, given that the debt to GDP level, because of the pandemic, is at an elevated level. The government needs to be very careful about spending. It cannot cut down spending too fast, because then the economy slows down and the debt to GDP starts going up again. It also cannot sustain spending at a very high level in aggregate, and therefore every rupee it spends has to have a high fiscal multiplier. So therefore, refraining from fiscal handouts and spending on things that have a higher growth multiplier I think they were all very strong messages that came through in the budget.
I want to come back to those spending plans in a moment, but I also want to focus on the revenue-raising side of things as well, because as you're talking there, we have markets opening, seeing a little bit of weakness in the early going, and of course, we've got a big jump in capital gains tax. The intention here, I understand, is to crack down on speculation, but could there be an unintended consequence here, and it weighs on markets, weighs on investment?
I'm surprised you call it a large tax. It's an increase. It is 10% going to 12.5%. I think there were many people in the market who thought that this could actually go up to 15%. Some even feared 20%. So compared to what was feared, this was much lower. And this is actually a rationalization. So, as I would say, the capital gains taxes have to be paid if you're making capital gains. So meaning that if suppose you were making 10% returns pre-tax, earlier you were getting 9%, now you're going to get 8.75%. So frankly, this is not as big a move as is being made out. The second is the attempt is to rationalize capital gains taxation across asset classes. So they have reduced the number of windows for long-term and short-term. So it's now only 12 months and 24 months. The number of tax rates, basically everything now in short term is 20%, everything long term is 12.5%, even real estate. What the government was observing, and rightly so, was that differential taxes were distorting the flow of savings into particular asset classes. And I think the attempt has been to streamline it. It is not, I don't think the attempt is to generate more revenue, because the impact on revenue is actually quite marginal.
Well, one thing that hasn't changed is this pledge to just keep it up with the infrastructure spending while maintaining that fiscal discipline as well. We do, on the other hand, have the economic survey report suggest that a slowdown in the economy might be due to slack in private investment. So how do you square that circle?
So what you need to get the private sector to invest is provide visibility. And by sticking to the fiscal consolidation roadmap, prioritizing macroeconomic stability, giving certainty that the cost of capital over the medium term is going to come down. Remember that if the government borrows too much, it crowds out investment. So by acknowledging that the economy can sustain its growth on its own, the government has been pulling back from supporting it. That is starting to bring down the cost of capital. You can see the 10-year bond yields are now below 7%. If they stick to what they're planning to do in FY26, and there's no reason why they shouldn't, the rates can actually fall by 50, 60 basis points further. So as the private sector starts to see stable inflation, in fact, there is about 100 billion rupees allocated for a price stabilization fund. One of the reasons that the Reserve Bank has not been able to cut interest rates is because food inflation remains very high. The government's price stabilization fund attempts to reduce the volatility in food inflation. So they're trying their best to give a certainty, a visibility, a longer visibility on macroeconomic issues. And I think that's what the private sector needs. In our view, the revival in the real estate market is anyway triggering investments. We have seen strong announcements from cement companies, from steel companies, from power companies. And as those investments start to hit the ground, you will actually start to see spending going up. And it's only because of market factors that most steel companies are thinking of doubling their capacity in the next 5 years. I think private sector investment is starting to come back.
Okay. Also, big emphasis here in this budget on employment, skills building, in US dollar terms, about $24 billion worth of spending here. How effective do you feel this policy is going to be? Have you seen enough detail?
Yeah, see, the year-on-year increase, while the headline numbers seem large, I think the year-on-year increase is not very substantial, but the government has, and in fact, that's the second part of any budget. So the first is the actual fiscal arithmetic, which frankly, in the middle of the year is unlikely to change a lot. The bigger message for me was in the budget speech, which talked about the medium-term priorities of the government. And the finance minister talked about in 6 months, which means the next budget, significant simplification of personal income tax rates, significant simplifications of customs duties, focusing on brownfield development of existing cities, so basically urban development, continued focus on infrastructure, the 1 trillion rupee innovation fund as India it should be moving towards being a product nation, prioritizing innovation and brand building. So all of these medium-term targets are, I think, also very good for job creation. The specific employment creation schemes, I think, responds to slack in the labor market. Remember that, like most economies in the world, India's economy is about 1 to 1.5 years behind where it would have been if the pandemic had not happened. And India is particular or unique in that there is a significant addition to the workforce. I mean, this is not a problem in Europe or China, but it is in India, that you have about 10, 12 million people entering the workforce every year. So there is slack in the labor market. And I think some of the schemes that the finance minister announced and which will ramp up over the next couple of years should try to solve that problem. Though I must say, disagreeing a bit with the previous speaker, that the actual spending on that is only about 100 billion rupees a year in this year. So it's not that substantial, but it acknowledges that there is slack in the labor market and there is something government wants to do. Yes.
All right, Neelkanth Mishra, we are out of time, unfortunately. Thanks for joining us. Neelkanth is Chief Economist of Axis Bank. For more on the Indian budget, you can tune in to a special webinar coming up at the top of the hour with Bloomberg's Menaka Doshi and JP Morgan's Chief India Economist Sajid Chinoy. Subscribers can watch that at Live Go on the terminal or at Bloomberg.com. This is Bloomberg. All right, let's take a look at markets this Wednesday in the Asia Pacific. We're looking at Indian property stocks. Of course, we were just discussing the budget, and there were some measures there to boost investment in affordable housing for the urban poor. So seeing some support for some of those Indian property names. Home First Finance in particular better by 1%. Oberoi Realty also better by 1.7% off the back of those budget announcements. I want to take a look at JGBs as well. They're sinking. Wasn't a great 40-year auction, and markets really not sure what's going to happen at the next Bank of Japan meeting. Data's been a real mixed bag there, and while there's a consensus that the next meeting is definitely a live one, there's certainly not consensus about whether or not we will see tightening from the BOJ or not. The yen appears to have made up its mind. That's strengthening, well, relatively speaking, 155.09 against the greenback at the moment. Oil in focus too. We're seeing it rising there, snapping a few days of losses now. We've got a few factors at play here. US crude inventories falling for a fourth straight week. We also have wildfires burning out of control in Alberta as well, and Canada. Right, we leave you with live pictures of Taiwan. Typhoon there, keeping markets closed today. We'll wait and see what happens tomorrow. That's it from Bloomberg Markets Asia.